for the physicians listening is like, yeah, if you want to do a new practice, you want to expand, you want to relocate, it's going to be expensive, but it's going to be the juice is worth the squeeze because not as many people are doing it. So, you can start to, I don't know how far along you are, but like definitely the first step is always the entitlements. So that's fun, going and talking to the zoning, and then you have to get your environmental studies and your impact studies and that sort of thing. But you kind of want to get the tenants in tow before you do that. And so really, I don't know much about your area in particular. Like the way that we've kind of historically worked is we'll get the assignment from the tenant. Like if they say, hey, we want to go to the northeast corner of Houston, Texas. Okay, then we start doing our analysis there. We try and find the trade areas within the northeast corner of the Houston, Texas, and get more specifically, we try and find like the crossroads. And then it's trying to, find something for their business. If nothing's available, we'll buy it, we'll develop it.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable, real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Hey, today I'm joined by Austin Hare, a former professional wakeboarder still competing, a Ninja Warrior national finalist, and managing partner of Leaders Real Estate. Austin is here to share his journey into real estate and strategies for creating stable, scalable investments. Let's go. Austin, welcome to the show, man. How's it going today? I see the sun is kind of shining there, right? Where are you at?
I'm in Orlando, and yeah, the sun is shining. It's been a little rough. We've had sub-zero temperatures of like 51 lately, but we're hanging in there.
All right, I'm in the Carolinas, and yes, it's been chilly, but the snow even hit the belt of the Florida into New Orleans and into Texas. Man, did you guys see any of that?
It was colder for longer here. Like in Orlando, I like to say we get about 1 month of winter, but even then it's like bits of cold, and so like it was just it was quick. We do have a wedding venue out in Cleveland. And it's just been getting monstrous snowfall. I mean, it's been like -10 and, like record setting years. Like the last couple of years, they hadn't had any snow up there. So we opted not to get the snowplow contract. And now I'm just like kicking myself.
Yeah. Now get one when you need it, right?
That's right. I'm going to get one next year, and it's like, it's not going to snow again. It's just going to be how it goes.
Yeah.
So.
Interesting. So tell the listeners just a little bit about who you are and your journey. Boy, this is a diverse journey too, from professional wakeboarder to real estate development. And come on, a national finalist, a Ninja Warrior. Man, that's just awesome. Tell us a little bit about who you are, Austin.
Sure. Yeah. So it kind of sounds scattered, and it is, but I'll try my best to connect the dots. So, I was I grew up wakeboarding and wanted to become a professional wakeboarder. So that's what I focused on. And that brought me down to Orlando, where I was doing what's called house hacking from reading Rich Dad Poor Dad. That's kind of like how I got started in real estate. So I'd find these houses on the lake, and I would rent out all the rooms with the goal of getting my rent for free to save up enough money to put on a down payment for a house. So when I was 23 in like April of 2011, at the very bottom of the market, I mean, it was just perfect timing. I got this house in Orlando for like $185,000. That was lakefront with 4 bedrooms and a guest house and a pool and all this kind of stuff. And I was getting paid to live there. I'm like, oh, that's pretty cool. So I never really, passive income was my whole thing. I was like, yeah, that's passive income. I'm not going to worry about it. So I wakeboarded a lot, really, focused on that. When I started getting out of wakeboarding, I started focusing, I opened up some fitness centers. And it was through there where I was doing what we would call like de novos or new startups that I met my partner to do the real estate selection. So essentially, in my head, I was like, okay, like I want to go to Winter Park. That's the cool, sexy area. I want to stay away from Kissimmee. Those demographics are garbage. And he ran a competition analysis. He'd been doing this for urgent cares for like 10 years at the time. So retail healthcare was a big thing for him, and this was retail. So it was hand in hand. And it's like, wow, where I wanted to go, my gut feeling was way off. And where his analysis hit me was spot on. So that was kind of like an introduction to commercial real estate and the site selection component. I actually, I bought another house at the time, residential, to live in. I put the old one up on Airbnb. That started doing really well. And then the house I lived at was a duplex. So I rented out the downstairs on Airbnb, which started doing really well. And again, I was just like, hey, passive income. Well, I focused, really hard on the gyms. And then in 2019, I sold those gyms. And that's when he invited me to start working with him on the real estate side. So, at the time he'd been doing this for like a decade. So I said, yeah, great. So we started doing the site selection for specifically multi-site healthcare groups. So think dental, derm, vet, urgent care, behavioral health, etc. Sub 5,000 square foot locations, and with the goal of buying the real estate when it was available. Because a lot of these multi-site groups, they don't want to buy the real estate. Single practice groups do want to buy it. That's great. We'd love to help them with the site selection, but then they kind of purchase their own real estate. So our goal was to be the landlords, and the owners of that real estate. And so part of the reason that I agreed to work with him was because I thought about like the money that I had made per hour in like doing the Airbnbs and the residential stuff. I was like, man, it's like way better than what I ever made doing the gyms or wakeboarding or anything like that, because I barely put any time into it. So fast forward a couple of years, it's a lot more active management these days. I mean, the very first Airbnb that I had, I think that my first stint at it was actually in the upstairs unit of the duplex where I lived, and I was going out of town for these wakeboarding competitions. And I had my clothes in the closet. I had food in the fridge. I mean, it was crazy, like stuff in the drawers. Like the standard was so low, and it booked out every single weekend. And so now it's like you have one hair on the bed and the place is immaculate other than that, and they cancel. I mean, it's just so different. So it's not really as passive as it once was. But I still, it's a lot more revenue than long-term rentals. So we do like that component. So there's kind of been a split prong approach where we, I've been doing the healthcare real estate where we buy and develop. We might buy an existing practice. And then we've also been doing the short-term rentals, which has kind of led to a little bit more luxury properties that you can also host weddings on. So, cool. Now we've got a wedding venue and a luxury short-term rental in Orlando, and we've got one in Cleveland, Ohio as well. So cool. That's yeah.
So where does Ninja Warrior come into there? And man, you talk fast. We're going to pack so much information into this 20, 30 minutes here. Where does the Warrior come from?
Hopefully nobody's listening to this at 2 times speed like me. That's my problem. I listen at 2x speed, so I talk at 2x speed. So look, like everybody's life, I think like, there's a lot of complicated overlap. I started wakeboarding from like 2010 to 2017, 2006 to 2017, I was doing that professionally. And then I stopped doing all sports for like 2 years. I still worked out. I mean, I had a gym, but I focused on the business side of the fitness locations that I had, the fitness centers that I had. And then in the very end of 2019, like December 2019, early 2020, my wife was like, hey, I want to try this Ninja Warrior thing. And she has an autoimmune disease called ankylosing spondylitis. And she was like really not healthy, or not, I shouldn't say healthy. She's a healthy person, but like she had a bad flare up where she couldn't like move very well for like a long time, and it would cause her a lot of pain. Well, she had like a kind of like a miraculous healing back in 2019. She's like, wow, I want to do something, right? And she's very athletic naturally. So I'm like, dude, I just retired from wakeboarding 2 years ago. My body's beat up. Like I was happy to focus on business and real estate. Like the last thing I want to do is another sport. But she dragged me into the gym, and within like 2 weeks, maybe even 1 week, I was just hooked. I mean, it's like a playground for adults, and there's a lot of overlap with wakeboarding with, grip strength and body weight ratios and stuff. And so we were just playing around in the obstacles, like swinging, they call it lacheying from bar to bar. And it was just so much fun. So we got lucky enough, they say 60,000 people apply, and like 600 get called, and then about 100 get aired. And then about half those get a hometown story. So yeah, I was lucky enough. We got the call, and then, I made it through to the semifinals. So they aired my story, and then they gave me a hometown story. And the next year I made it to the finals. And then my wife has also been on the show 3 times now. So I've been on it twice. She's been on it 3 times. And then we've also done the couples edition in addition to that.
Wow. Well, congratulations, man. That's awesome. Doing something that's fun, and then doing it with your family, and then being successful doing it too. So congratulations. I think I was in Florida one time, and I think for some reason it was in front of like the racetrack in Daytona. I think I remember driving past like the American Ninja Warrior like setup.
That was before my time, but yeah, they used to have auditions. So when COVID came around and they started doing all the lockdowns, it was a little bit different because you used to be walked on, and you just waited in line, and like you had to actually go through the course.
Old school.
Yeah, but now you send in your audition, and they just call you yes or no. Which honestly, I'm kind of glad you don't have to, because you had to wait all day to get
Yeah.
a chance to go on there. But yeah, they used to do it out in Daytona. So you saw the way that the old school way that it used to be. That's
Wow.
crazy.
So you've got this two-prong investment thing, and a piece of that is the medical retail business. Why do you think healthcare related real estate is such a strong opportunity for investors, especially physicians?
Warren Buffett talks a lot about return of capital before return on capital. And so really my whole life, I've actually been focused on risk adjusted returns. You might see me doing a double flip on the wakeboard and thinking like, this guy's crazy. But really like what you don't see is all the trampoline work that I did before that, all the work I did in the foam pits before that. Before I'm cutting in at 35 miles an hour, like I've practiced it a lot of times. Because I don't actually want to get hurt. Like I'm actually one of the more safe guys, believe it or not. And it's kind of the same thing with real estate. It's like, look, when we sat down, my partner and I, we looked across all the asset classes within real estate, and it's like, what do we think is the safest one? I mean, if you look at the SBA data, dental has like the lowest default rate out of almost every business. And so, there's just a need for healthcare. I think like maybe to preemptively address the pushback, you might say, well, what about digital doctors and, everything that's going online? And yeah, that's all true. Like
Digitally correct my teeth though, right, Austin?
Well, exactly. Like you're never going to get a digital haircut. You know what I'm saying? You're never going to get a virtual surgery.
Yeah.
So there's just, look, we're going to have increased needs for healthcare. Both are going to increase, in fact. But like, there's more and more of a push towards the retail spaces because it's just easily accessible by the consumer. So I think that by one token, you've got a building, which if your listeners are on here, they've already kind of sold on the concept of real estate, but like, you're probably not going to lose money. You'll at least get your money back, which is not ideal. You want to make a return on it, but like you've got a building, which is an asset that you can sell. So when you build something, you're providing value. When you purchase something, you've got something of value, all the commodities and labor and everything that went into it, as well as the land. In addition to that, when you're putting in a tenant that has good credit that can pay the lease, like if you sign a long-term lease with a mom and pop hair salon, are they going to be there 10 years? I don't know, maybe not, but that's why we focus on healthcare, because they're so much more sticky. They're such a sticky tenant, and it's unlikely that they go out of business. And in particular, multi-site groups, right? You've got, a 30, 40, $100 million organization signing on to these leases. That they're not going to default on the lease. So that's kind of what I spend a lot of my time doing, is just, creating relationships with these multi-site groups and figuring out how can we be of service to you by, doing the real estate. So we work on getting the assignments, whether it's for, a sale leaseback, which just means we're buying an existing location. They're already there. They just don't want to be the landlords anymore. Or most of the time it's doing a new construction development. So we might take a, 1.8 acre, 2 acre, 1 acre plot of land. If we can fit 8,000 square feet on there, we'll bring in the tenant, our medical tenant, for like half of the building. And then we might bring in another well-known retailer for the other half. So we've done deals with Starbucks and Panda and, Chipotle, even like some large franchisees within Jersey Mike's and stuff like that. But once you start to kind of build a relationship with them, then you have, your confidence builds that you can fill the space. So it's kind of like we do a multi-tenant development to help bring down the cost of the real estate for our healthcare groups, but it also gives good returns for the investors. So it's like, it's creating a win-win. So like our investors make good returns, and then also our clients in the real estate side don't have to spend as much money as they would for a freestanding building. So does that answer your question about why we like healthcare real estate?
Yeah, mitigating that risk. It's a stable piece, and the way that you're looking at the tenant as opposed to the location. So obviously the location matters, but stabilizing the risk is going to be looking at that tenant as well too. And the way that you described the size of the business, the type of the business, the likeliness or unlikeliness of any delinquencies based on the business, I think that all makes sense. What does this look like? So I personally have a couple of locations where, through the years, we've acquired these things. And in my mind, I'm playing like Monopoly in my mind with these pieces, right? Stacking these pieces together. I know that the zoning would lay out really nice for this type of approach. What are like the first steps that you would give to the listeners who are say, hey, this thing interests me. What do I do? So
when you say you've been stacking these things, are you talking about the land in particular or the buildings?
Yeah, different lots. So I've got one piece where, it's like a double lot in a commercial area where I think the traffic would work good. I know there's just, a couple spots down another, it's like Borges is this big hospital, or Borges Bronson is this big conglomerate in south west Michigan. So they built right near there. So I think it's like there's good traction there. So that particular piece, I know I can grab the corner piece as well too. So stacking the different lots together. The other piece, I've got the corner lot, I've got the lot behind it, so one of it's a mixed use, the other one's a house, so these things kind of like stacking these pieces together, and I think playing Monopoly with them. Like, where do I go from here? Like, what's the direction that you would suggest for the listeners who maybe have their own practice, right? And think because they know the neighbor, they talk with them all the time, and then they say, hey, I'm going to sell. Well, what happens if you stack these two pieces together? Then you're growing the opportunity, right?
Yeah. So, there's definitely a play there, but that one, to be honest, is like a little bit outside of our wheelhouse, because with our groups, the specialties that we focus on are typically sub 5,000 square feet. And so if we do a 3-tenant location, we might get to 10,000 square feet. But I will say that, like, yeah, if you start to do this Monopoly approach where you're, stacking all of them together, you can all of a sudden start to do much larger projects. So, there are a couple options. You could do, like, depending on how many acres do you have approximately?
It's small. So these are really small lots. The one building, yeah, I mean, the two spots together still may be in that 5, under 10,000 square foot building.
Yeah. So look, surprisingly, their retail is underbuilt, which, a lot of people find it hard to believe. But the reason is because during COVID, everybody stopped building retail because they're like, oh, in-store is done. Like, we're going to go, everybody's going online. Then they found out that wasn't true. Well, the cost went way up, right? And so now I'm sure any physicians, doctors listening, like, they're trying to find second generation space, retail space. It's very hard. It almost doesn't exist. So, like, if you're going to do a new location, you're going to have to pay really, really high costs. So I think that having good retail visibility is good, and it is in demand. Now, it's going to be expensive. I mean, there's just no way around it. I was just having this conversation yesterday with a tenant, a client of ours, because it's like, we look back at how much real estate has gone up since 2019, and it sucks. Like, it's really high. But just to put things in perspective, let's imagine
how much construction.
Yeah, land too, like land, construction, labor, supplies, materials, cost of capital, like literally everything is up. So now the price per square foot is really high. But let's look at that differently, and let's imagine real estate was the same cost. Well, there would be a lot more competition, and so people are, especially the larger retailers, they are paying the bigger rents. It's just the way things are. But as a result, there's less competition coming online. So it's just a trade-off. So I would think that what I would say is, like, if you're thinking about developing it, like, that, I believe, I have high confidence you'll get it filled. And the second thing for the physicians listening is, like, yeah, if you want to do a new practice, you want to expand, you want to relocate, it's going to be expensive, but it's going to be the juice is worth the squeeze, because not as many people are doing it. So, you can start to, I don't know how far along you are, but, like, definitely the first step is always the entitlements. So that's fun, going and talking to the zoning, and then you have to get your environmental studies and your impact studies and that sort of thing. But you kind of want to get the tenants in tow before you do that. And so really, I don't know much about your area in particular. Like, the way that we've kind of historically worked is, we'll get the assignment from the tenant. Like, if they say, hey, we want to go to the northeast corner of Houston, Texas. Okay, then we start doing our analysis there. We try and find the trade areas within the northeast corner of the Houston, Texas, and get more specifically, we try and find, like, the crossroads, and then it's trying to, find something for their business. If nothing's available, we'll buy it, we'll develop it. So that's historically how we've always done it. We are starting to do a little bit more speculative development. And so, either way, it's a challenge, but that way the challenge is going to be, finding the tenants to fill it, because there's a lot of people who want to go there, but you're kind of blending, getting the tenant with the best credit, and that could take a long time. So I don't know if that answers your question.
Yeah, for sure. Entitlements, this process of, say, I've got this property, how do I know, or how can I make sure that what I want to do on it is okay, and then get that clearance from the municipality? Yeah. So how far, like, you can do the ground testing, to get soils, get that stuff done, which is, pretty straightforward. But when it comes to, like, the drawings to present to to the municipalities? Like how far along, or when do you engage the architect, and how is that juggling match won?
Yeah, it is a juggling match. It's always like threading multiple needles. Like I think it really, I think it helps to have kind of like a tenant until first. I mean, if you're going to do retail, you can kind of start you're going to have to hire an architect, and like they're going to have to tell you how many square feet you can get. And you can kind of start, I mean, you're going to have to like, these are some of the due diligence costs that are not refundable. And that's another reason why like a lot of these buildings are so expensive, because there's projects that don't work that you lose money on. And so, it's got to be a home run in order to entice developers to go out and start spending money on due diligence costs on sites that don't have a guaranteed outcome. So yeah, you kind of got to like, it's always a chicken or the egg situation. But you kind of have to start like hiring architects to kind of see exactly how much square footage you could fit on there. Do you have to have a retention pond or anything like that? You do your ALTA studies, and your environmental impact studies. And then at the same time, you kind of want to start doing both, kind of want to start sharpening a tenant, but you don't want to go like too detailed on the architectural plans before you really have a tenant in mind, because a BP, as an example, like is going to be way different than Starbucks, in terms of what's required and how the build out is.
BP, so, like a gas
station. Yeah.
Oh yeah. Yeah.
Like sometimes these retail places, gas stations want to be there too.
Yeah.
So yeah, it's like you want to kind of do the minimum that you can before you really have a tenant, like, because architectural designs, like they cost a lot of money. I mean, you can have verbal conversations with the city and see, are they open to this kind of thing? And they'll give you a pretty good idea. Like they might just tell you straight up, hey, no, we're not going to allow a gas station right here. But they could say, yeah, we'll allow, a retail dentist or a healthcare group or whatever. And then you can kind of at least start, building out the shell or seeing how many square footage you can fit on there.
So in my mind, these environmental studies paired in with what I'm thinking is called the feasibility study with the architect. So the architect's looking at the site, looking at the existing code, given, lot coverage and all of this stuff to give you that square footage, give you that general idea, and then progressing from there with entitlement and potentially the tenant at the same place.
Yeah. And you already own all this real estate, right?
Yeah. Yeah.
Yeah. Are you planning on flipping the land, like entitling it and then flipping it? Because I know people that do that too. Are you planning on developing it yourself?
I've made it cash flow while I'm holding it. I guess just like waiting for the right opportunity. And
how do you get it to cash flow? Is there an existing tenant?
Yeah. So one of the properties, all the properties have structures on them already, and the one's like a mixed use. So we've got 3 commercial spaces on the lower level and then 3 apartments on top. Part of that, there's another property adjacent to that one's got a house on it, and then the other property has got a house on it, but it's zoned commercial, but we've got a house on it, so I've just rented it out as a single family.
Yeah. Okay, no, that makes sense. And it's probably currently not the highest and best use, but based on what you told me about being right there by the hospital system.
Yeah. So it is like in the small perspective world, it's doing its job. It's cash flowing, and it's doing that. But on the dreamer side, is like, I know that there's so much, but then you ask the question, do I really want to go through that stress of going through that entitlement process? And we talk about mitigating risk with the tenants, whether it being healthcare, medical, that kind of tenant, mitigating that risk, keep that stable. But when you introduce, the more people you introduce, the more risk that you introduce. So contractors, oh my goodness. So that in itself is a risk level multiplier, right? So how do you mitigate the risk in your development process, like working with contractors, especially if somebody says, hey, Austin, I want to move to this spot in Austin and you've never built there before. Like, how do you mitigate risk? Because you probably don't have those types of relationships to lean on.
Yeah, well, we're pretty lucky in that sense that we have our general contractors that we've done, hundreds of transactions with in one form or another. And so we know that they're going to deliver on time and their prices are going to be competitive. Maybe not the cheapest, but they've done, they've focused on healthcare and they've done stuff nationwide. So
okay.
We have confidence. Yeah, we have confidence that like we can go anywhere and they're going to be able to deliver. A big part of it is like, talking to the city as well, like they kind of handle some of the architectural stuff too, even though we're doing a little bit more architectural stuff in-house now. But yeah, it's definitely like having that team, because yeah, labor is just, it's not only is it high, but it's unreliable. It's like, as a society, we've taught people that swinging a hammer is bad. You've made bad decisions, which I don't think is necessarily true, but as a result, like they really discourage that kind of manual work in school. So it's one of two things. It's like the bottom of the barrel type guys who did, drop out and make bad decisions, or it's like if guys can actually bring it together and like wrangle those types of people to work for them, like they're charging really top dollar, like to get it done, especially when it comes to commercial, more so than residential. So they can get it on done, they can hit timelines, but like the type of workforce, is difficult to manage, and you got to pay a lot of money to incentivize people to do that. So, again, we're glad that we have a vendor that we work with in this sense, because otherwise, you're really going to be like just vetting a lot of people, making a lot of phone calls, getting a lot of referrals, like that sort of thing. And yeah, each local municipality, I'm sure they have, guys that do a great job. But a lot of times, the problem is either A, they're really backed up, or B, they may not have done like this particular niche. Like in our case, maybe they've done a McDonald's, but they haven't done, a doctor's office. And there's just different, electric requirements and plumbing requirements that like may bottleneck you just a little bit if you're inexperienced in that particular niche.
Wow, what an awesome conversation we had today with Austin here. Hey, you know what? There's so much more. We've actually got part 2 of this episode coming up. There's so much to talk about. Today, we talked about how real estate can be a natural next step after other entrepreneur ventures. It's something you can grow into. Earlier on, house hacking and Airbnbs can be a great way to build early passive income. And finally, and always, surround yourself with mentors and partners who help you grow. Reach out to Austin on LinkedIn, or better yet, check out his podcast, Helping Healthcare Scale. Part 2 is coming up with Austin. He's going to share insights on healthcare real estate and strategies for physicians interested in investing. Stay tuned.